This is your technical update from the LMAX Exchange Research and Analytics Desk for Monday, February 23rd, 2015. Euro dollar. So the euro remains locked within a consolidation over the past several days, with the market defined between 12.65 below and 115.34 above. We're going to need to see a break on either side for clearer directional insight, with a break above 15.34 opening a more significant correction up towards the 50-day moving average, which currently comes in around 117, while back below 12.65 will put the immediate pressure back on the downtrend, the downside for bearish resumption below 10.98 and towards 110 further down. Sterling dollar. So cable has seen a nice correction with the market trading all the way back up to 54.85 or just shy, which was some previous support, and now is looking for the formation of a medium-term lower top ahead of a bearish resumption back towards the key lows from 2015 at 49.51. There is still risk for additional corrective upside towards the 156 area, but ultimately the market should start to find a medium-term lower top, with gains limited from here in favor of a bearish resumption. Dollar yen. Dollar yen remains locked within a very well-defined consolidation going back a few months, with the market now right in the middle of the range, trading in the 118 to 119 area. We're going to need to see a break above the 21.85 7-year high from December to open the door for fresh bullish continuation towards 125 further up, while only back below 115.55 would take the immediate pressure off the top side. In the interim, any setbacks are expected to continue to be very well supported ahead of 117. Euro Swiss. So Euro Swiss recently broke out of some consolidation highs, with the break above recent 106.50 range highs opening the door for a measured move upside extension towards the 110 area. But a bearish reversal day last Friday does suggest that the market could be a little bit exhausted and opens the door for the possibility of a small pullback before the market seeks out the next higher low ahead of this bullish resumption. Ultimately, only back below 104.15 would compromise the newly adopted bullish or constructive outlook with Euro Swiss. Aussie dollar. While Aussie dollar remains locked within a very well-defined downtrend, the market has been consolidating over the past several sessions and is now contemplating the possibility of breaking above some key resistance at 78.76 and continuing this correction up towards the 81.25 area, which would be a measured move. However, inability to establish above 78.76 would keep the immediate pressure on the downside for a break back below the recent multi-year low at 76.25 and towards 73.75 further down. Dollar CAD. So while dollar CAD remains locked within a very well-defined uptrend, with the market focused on an eventual retest and break of the recent 128 multi-year highs and towards the 2009 peak at 30.65 further up, there is a possibility that we see additional consolidation over the coming sessions before such bullish resumption. There is also risk that this correction that we're seeing, or consolidation, could extend downward towards the 120 area before the market puts in that medium-term higher low and heads back towards that 30.65 2009 peak. Ultimately, the bullish trend does remain firmly intact, and really only a considerable move or a weekly close back below 120 would compromise the constructive outlook in dollar Canada. Kiwi dollar. So Kiwi has had a nice correction over the past several sessions, with the market trading up towards the 76 area. 76.09 represents some key previous support, and the market should find a very strong resistance in this area in favor of a fresh medium-term lower top and bearish resumption back below the recent multi-year low at 71.76. SPX 500. So no signs of let up just yet, with the market unable to that there were signs of exhaustion last week that potentially were forming, but those were negated with the market breaking to another record high above 2110 now, trading up to the 2112 area thus far. So no signs just yet of exhaustion, although there is the possibility that we do see a reversal on a break back below 2083. A move below 2083, which is the 17th of February low, would be required to take the immediate pressure off the top side, while inability to do so leaves the door open now for fresh upside towards the 2150 area. Gold. So gold now is flirting with recent trendline resistance, rising trendline support, off of the multi-year low from 1131 back in 2014, and the market is expected now to find a higher low by this trend line in favor of a bullish resumption back towards the recent 1307, 1308 highs and towards 1345 further up. Ultimately, only a daily close back below 1197 would give reason for concern and potentially put the pressure back on the downside in gold. That's all for now.